It is now time for The Trader's Edge.
Hi, everyone. Basil Chapman sitting in for Steve Rhodes. Steve is suddenly unable to do the show this morning, a rare occurrence, and it's my pleasure to be sitting in for him this hour. And, of course, my usual time is 11 o'clock till noon Eastern Time at 877-927-6648. And we'll just go right in. I don't have those wonderful, wonderful opening thoughts that Steve always has. Actually, I have something here that I've been wanting to share with you for a long time. I got this from a cousin of mine. Sent me a whole bunch of these little tete-a-tetes, these little conversations between people or statements that have been made by famous people. Sometimes not famous people, they're really great. I love this one. This is George Bernard Shaw to Winston Churchill. I'm enclosing 2 tickets to the first night. Bernard Shaw. I am enclosing 2 tickets to the first night of my new play. Bring a friend, if you have one. And then Churchill, who was in fact a reporter for a very long time. I'll tell you a little story about Churchill in a moment. He retorts, and they must have been good friends, otherwise they wouldn't have done this. He says, cannot possibly attend first night. Will attend second, if there is one. So that was pretty darn clever. Churchill was in fact a reporter. He was here in the United States. He was a very good friend of Bernard Baruch. Now, as the story goes, and I read this in a book about Bernard Baruch, as told by his secretary. So I don't know about the verification, but it's a great story. No, it's a sad story, actually. That Bernard Baruch had told in 1929, had told Winston Churchill that he was getting out of all these stocks, that he was just, it was nothing that he had. Now, of course, Bernard Baruch was a man that was also, in fact, he was the Federal Reserve. He would loan the United States bond money out of his own account for periods. So things were a little different then, very personal. So Churchill gets out of everything. But then what happened is he overheard Bernard Baruch talking about buying shares. He was staying at his house as a guest. And he heard him hear this conversation about buy this, buy that, buy that. So he didn't say anything, but he immediately started buying. And I think this was as the market was really coming down in that October period of 29. And he started buying, and he told his family to buy. Well, it turns out that he had to go back to Britain very soon after that. And because of his rather depleted economic circumstance, because obviously that was the wrong thing to do, little did he know that Bernard Baruch was in that morning and out by early mid-morning, because that's what all these guys were doing. In fact, remember, you can read those stories of the 1929 crash period where the bankers, the Kennedys and the Chasers, etc., were buying, the bankers were buying shares and then saying, we're putting in orders for 40,000 of GE or whatever it is. And they were in, but they were also out very, very quickly on the rebound. So poor old Churchill went back and he had to be a reporter before he became a politician. That's my story. Anyway, let's go to the numbers now. The S&P, I've got the E-minis right up here just to show you. There's something going on at TFNN this weekend. This is I've never seen this before. It is quite remarkable that we're able to put this together. Look at this. 6-pack webinar bundle, this weekend only. Memorial Day weekend special. Get 6 of our most popular webinars for the price of 1. And it's where did it go? It's featuring, learn more. There it is. So here it is. Foundations of Options Trading, 2 hours with Tom O'Brien. Strategies of Options Trading, 2 hours with Tom O'Brien. I mean, come on. That is fabulous. Moving Averages, 2 hours, Basil Chapman. That's my webinar, Moving Averages. I love that webinar. And then the stochastics and MACD webinar, 1.5 hours. That's special to me. That I thought was a very, it was succinct. It was putting together a whole bunch of my techniques of how to use the stochastic and the MACD. So I love that particular webinar. Candlestick charting by Mike Comey, fabulous interpretation of how to read candlesticks, especially his favorite candlesticks and advanced candlestick charting. This is 11 hours. So I thought, great, God, again, what a deal. For the price of one, you're getting 6 webinars at $149. I thought, that's an $894 value. Isn't that great? You'll have the whole of the weekend to review. No. That wasn't good enough for TFNN. I can't believe it. This is going to be on your webpage for 90 days. 11 hours of education that you can review anytime. And what a period to do that. This is just, we're on the cusp because we've had this rotational correction. We're on the cusp of knowing next week if there's going to be a breakout decisively above the all-time highs in the Dow, the S&P, and the New York Stock Exchange, or there's going to be a failure. If there is just a nominal new high and then a very sharp 200 to 300 point pullback in the Dow, we have seen some kind of a top here that should take quite a number of weeks to resolve. That's just the way I'm looking at it. If it breaks out decisively with the Dow in the 17,000s before you can blink an eye, something else is going on, which is one of the reasons why in my opening call, we're trying to prepare for this eventuality. We've raised cash. We have a long position. We have a particular short position, which we're going to add to on the long side as a quick trade to the upside before going back and adding to the short side, because I think that particular sector is going down intermediate term. But at the same time, we are looking at long positions in the sector that has just responded after a whopping decline with a very, very nice gain. So we're going to be looking at that. So got a couple of questions. Ernie asked, Basil, can you give the date that TVIX will split? Now, I looked and was not able to come up with a date. No, Ernie, I've just been predicting that when it gets into the low single digits, it's trading the TVIX, which is 200% long the volatility index, trading at 4.61. That's what they're going to do. That's what they keep doing with these darn things. They are useless in many ways, and they are outstanding in very other ways if you're able to trade them correctly at the right time. So, no, they just keep getting the longs and the shorts of the ETFs they keep getting lower and lower. They have to keep doing that. I was talking about a potential 4 or 5 to 1 inverse split. I haven't read it. I just think that's going to happen. All right. So what am I talking about in this particular webinar? I'm talking about using moving averages. I'm talking about, look at this. This is the 2-minute. Gave a really nice indication of a top. I won't go into the peaks in the Chapman Wave methodology. This peak F top here in the E-mini going to 1893 round number at 6:02 this morning. Then it pulls back and it goes to the most recent low of 1889.75. So that's almost 4 points. That's 4 points. So that's just the 2-minute chart. So I'm going to explain to you how and what is important as we move along with my charts if you're not used to looking at my work. Here we go. I'll move this out the way. So, left side, right side price time match. You see this left side low of 1889.75 made in the 5-minute chart at 3:40 this morning. Runs up all the way to a peak E in the 5-minute chart, and then look at that fast-moving average of the MACD. Look how beautiful it didn't break under the red line. Now, I'm going to talk about this. I keep getting berated. I have a particular a watcher of my calling the fast-moving average. I call it the fast-moving average of the MACD, the green line. I use it both for simplicity and because it is the faster of the two moving averages. I understand very well. So this is, hello, Basil, read the MACD. And we've gone through this many times before, and he's absolutely correct. Thank you very much for your response. I appreciate it given your tight time. I appreciate it given your tight time constraints. Still, I'm hoping that you will reconsider the use of your MACD terminology. You refer the MACD fast-moving average as a 9-period differential, when in fact both descriptions are I'm quite sure are incorrect. Well, we'll do that together right now. Since the market hasn't opened, we've got a little time. I'm going to tell you exactly what I'm looking at in a moment. So, the black MACD line of this chart is the MACD itself. Right, so that's the moving average convergence divergence, and that's he calls it the black line, calling it the red line just for now, because that's what it is over here. So it's the red line. And that is the differential between the 12 and the 26 period moving averages of price. The red MACD line of this chart is a 9-period moving average of the MACD. So I've got them as green and red. So that analysis is absolutely correct. I'm going to go through this again in my hour because I'm sure that he's not listening to this hour because he wouldn't be, unless he's listening to Steve, but otherwise he'd have to listen to my hour. So in that kind of regard, you are right. It is actually called the 9-period differential in almost all the technical analysis. I'll be right back, folks. The E-mini's up 1 point, and we'll talk about bonds, we'll talk about gold, we'll talk about a bunch of things. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Some of the, just real quickly, because there's this fantastic offer coming up as we speak. It started yesterday, coming up for you if you haven't signed up, that is. And it is to have 6 webinars that normally are $149 each to get all 6 for one price. And I thought it was just for the 3-day weekend. I thought, Jack, what a fantastic deal that is. No way. Not at TFNN. We're about education. Turns out you're going to have it on your desk for 90 days. You can just go through each one. And all you want to do is you want to glean like Steve does in the morning. He teaches about different little indicators that he's doing. He's got the Rhodes momentum indicator. He's got all these wonderful tools that he uses. In this particular instance, we're going to be able to show you, this is Tom, myself, and you've got the candlestick, which is done in a very succinct way. And then Mike Comey did that on candlesticks. So this is what I'm showing you. See the green line? It doesn't really mean very much over here. This is the E-mini 5-minute chart. But wait a minute. Look how important it is here. That green line is the 200-period moving average. Look at it. Treat it very often. You treat it as, you forget about it because it's a 200-bar look-back period. But once you start getting close, it becomes, that's the green line there. It becomes a magnet. And if you can learn about the sine wave movement that occurs very often around the 200-period moving average, if it isn't deflected right away from that 200, like a repellent or a propellant line, then what happens is it just keeps going up and down until it breaks away, and then it treats it as very strong support or very strong resistance. So that's, I wanted to show you that just on a visual basis. That's how I dealt with the moving averages when I started. Yes, there's a mathematical way of looking at it. I prefer to look at it as a formula, a visual formula to say, hey, this is real easy. I don't have to know the mathematics behind it. There is mathematics behind it because it's a long 200-period look back. But the moment it hits that, I've got to assess, what does it keep doing? And in this case, every time you pull away, it wants to go back, either up or down. That's that sine wave action. So I just want to talk a little bit about that. Now let's go to the numbers. And you can see the charts that I'm showing you live on Tiger TV. Man, that's so fantastic. We're live at Tiger TV. There are some other aspects. Let me talk about it just for a moment. I was talking about the 5-minute chart. I don't want to finish that thought. The left side low bar went to a peak E. Then what happened is it came right back. What was the low that I was talking about? 1889.75. What was the most recent low just 30 minutes ago? 1889.75. How would you have even known that unless you knew that there was a parallel line. Now, I like to talk about the plumb line. That is sometimes the midpoint for an exact move to the upside, an exact move to the downside of the same number of bars, or vice versa, an arch or a cup formation. And in this case, you had the arch formation, but it wasn't exact because it failed about 4 bars before it failed to reach that level. So then there are other ways to be able to extend it, and those are ways that I like to teach. That's not on the webinar, but what is on the webinar is how to use, you see that maroon line right there? Let me see that. Yes, you can see it now. That's a maroon. You might not see it, but it's that line right there. You see that wiggly line? That is the 9-period exponential moving average. And that moving average is above that beigey one, and that beigey one is a different moving average. And you can learn how to use 2 different moving averages to be able to keep you in a trade. But the longer-term trade is using this 9-period differential. I'm calling it, I've thought about it so much, I'm done with thinking about it. I'm sorry, that's the way it's going to be. This is a faster moving average than that, and that's what I'm going to use. I will always explain that in a mathematical formula, it's not quite like that. It's really the vertical distance that we're talking about some other things. But if you look at it, it works beautifully as a faster moving average, that green line. In the slow stochastic, you couldn't hold above 90%. That said, it should fail, and it does. Now you've gone to 74% until it goes to 80%, and holding by flatlining above 80%, this is vulnerable to a bit of a pullback. So, with that said, a couple of things that I want to look at. E-minis made a high of 1898.50. That's the future. The June future with the doji high on the 13th of May, pulls back. It's making a V-shaped pattern or a cup formation. My suspicion is today we see some kind of a digestive move in the NASDAQ, as we saw yesterday in the Dow, and the Dow might be a little bit weaker. And then next week we should try to rally to new highs as long as we don't have a strong double to triple-digit down move between today and Tuesday. Hey, I'll be back for the opening of the market. Basil Chapman sitting in for the one and only Steve Rhodes. Thanks for being here, and I'll be right back in a few minutes.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
They're off. If we haven't got, there you go. They're off. And the Dow is up 24 at 60,567. The S&P is up 1895. Up 2.89. The comp index is up. Comp index is up 7 at 4162. Gold is down 2 at 1292. High grade copper is up 0.02 at 3.165. Silver is down 10 cents at 1942. Got bonds up 13.30 seconds. We're going to look at bonds right in a moment. At 136 and 29.30 seconds. Dollar is up 11 cents at 80.36. You've got, what have I missed here? Crude oil. Where's crude oil? Give me crude oil. 104.05. This is going to be very interesting. So what we're looking at here is, let me run these through. So let me just briefly, I should have done that during the break. It would have been so much easier. I'll try to do it now. I'll put it on and it'll pop up while I'm doing the show. It's no problem. We can do 2 or 3 things at once. That's what we need to do. Now look at that. You remember the E-mini I was talking about just a moment ago? That I'm jumping around, but that's important. Oops, where did it go? That E-mini, I said, unless it holds the 80% level, it's going to pull back. Well, it pulled back because it didn't get there. Now it's at 86.76. The MACD is expanding, and you've got the futures at new recovery highs at 1893.25. Whoops, jumping around, but it broke out. So that's important, but it is the first opening salvo, first big pop-up. So let's see what happens as we move along. I'm still expecting some kind of a consolidation day today in the NASDAQ area. The Dow, I'm suspecting, will close a little bit weaker. Now, let's run these things. Bonds right now are trading at 136 and 30 seconds, up 0.5 point. What's really important about this, in the Chapman wave methodology, am I going to find that autoplay? There it is. In the Chapman wave methodology, the core, the concept is that from the most identifiable low bar, you should be able to count 4 successively higher peaks and oh, that wasn't right. Why am I? Usually I just type this in because there's no problem. There you go. Nope, I didn't. Made a mistake. My own password. Good grief. I can't believe it. So I'm stopping here because this is embarrassing. There. Whew. I guess you can't do two things at once. The Chapman wave methodology, most important thing is to be able to identify the low bar from which to start a wave count. And in this particular instance, let me just type in here, find, and we'll go to slide 25. I think it's 25. There we go. So you'll find the most identifiable low bar. This is on my CD introducing the Chapman wave methodology. And then you count each successively higher peak. The object is to get to at least a D. And if you get to the D, there could be a deeper pullback. That's where you can expect the deepest pullback. Doesn't have to be, but that's about where you'd expect it. So in this particular chart, look what happens. You got your up arrows, you got your down arrows. Right there at D, pulls back the deepest in price, and then it starts to brand new A, B, C, P, D, and then it also goes to E and F. Then it pulls back. Then it goes to A, B, C, D, E, F, G. This is a great example of the limit, especially that you don't often get G's. But think of it as a piano. If you're a musician, you know that you can only go C, D, E, F, G, A, B, and then C gets repeated. There are no H's in this particular thing. So it's only the 7 letters A, B, C, D, E, F, and then you go to G if you need to do it. So this is just a real quick concept. Now look what happened here. In the bonds, you've gone to a peak D twice from the low bar. In fact, there was a peak F, then it went to peak A, B, C, D, broke out, went to A, B, C, D, higher level. It's just a stair-step move, beautiful stair-step move, consolidation. Oh, you see the black line? Remember, remember, for those of you just tuning in, just go to the front page of TFNN, because right there you will find there's a special going on right now. The 6 of our most popular webinar archives for the price of just one. So instead of $900, it's $149. You have it for 90 days. This is where I'm talking to you about moving averages or the stochastics and the MACD. Those two webinars I consider to be very important in my work. And look at that black line. There it is. That black line says that's the 9-period moving average. The bonds are above it again. The MACD is just showing a little bit of weakness. The stochastic says, hey, this is pushing your luck to the upside because I haven't got any strength. So the price sometimes can lead the technicals. But most importantly, in the weekly chart, we've gotten to a leg E. That's where you can expect some kind of a digestive situation. But if you look at the TLT has only made a C. I can't really count it any other way. It should get to a D at some point. I suspect late next week we'll see another rally. There's a chance we could see another rally. But if the TLT takes out, it's at 112.52. That's the Lehman 20-year T-bond fund. If it takes that out, this support, that gray line support. Also, I love for you to just learn how to do channels. You'll see me doing it during my webinars. I'll grab just 2 lines, an outside line, an inside line. But within that, there's something I call the inside track. In this case, you see that green line in the TLT, the daily? Every time it got into that area, it said, hey, that's a buy. If it was to break below, in this case, if it breaks below 110.50, closes below that, that'll be the red line, this red line here, and say, uh-oh, you're in trouble. Now you're going to consolidate for a little while longer. All of a sudden, you say, hey, if you get down, TLT gets down to 110, 108.91 is the 200-period moving average. That will come into focus. So that's how I like to do these things. Now, so that's bonds right now. So the bonds are acting very, very well. Could they consolidate a little bit? Yeah. I love to look at these Ds, and we haven't got the D in the TLT, but we have in the bonds itself. Wait a minute, Ds? We're talking about Ds? What about the bond? What about the dollar? Well, the dollar's gone where? You remember the line I was just talking about a few moments ago, and I said to you, keep in mind that the Goldie beige line that you're looking at over there, which is the 200-period exponential moving average, it's like a magnet line when it even the price gets close after not being there for a while. You don't even think of it like a gap or a round number that was important or a doji candle. It just becomes a magnet. That's all you need to do. And in this case, the dollar went right to, for the first time since it broke down in, was it February? Yeah, February the 7th, when it broke under 80 point, I think it was 80.60 something. Yeah, 80.60, and it went to 80 point, it broke under 80.60. From that moment on until right this very minute, it's the first time that it's gotten back to the 200-period moving average. And that pattern, the H pattern, you see this lowercase arch formation, breaks under and then turns around and goes up. That's very important. Oh. Sorry. I've got a phantom peak. A, B. This, in fact, is a phantom peak. Don't often use it. I want you to use it because I want you to make sure that I was a little bit ahead of the game. Technically, this is not D, it's C. But I kept in mind that when you have an exact double top, in this case, in the index itself, 79.92 on the 9th of May, 12th of May, it's a weekend, Friday into Monday, the 12th of May, it goes to 70.92 high again, and then breaks out a third bar breakout. I always like to look at it and say, hey, that one penny could have made that a peak. I want to be ahead of the game. Normally I'd color it in red. That's why I forgot it. Or pink. So that is, technically, officially we're in C. Unofficially, I'm saying I want to be a little ahead of the game. I'm thinking of it as a possible D. Let's look at the actual contract itself, DXM 14. Yep, it's exactly the same thing. And that's even more pertinent because that is the actual trading contract. 79.970, 79.970. Okay, so here again, we're talking about this. I'm still going to keep it in, and I know that I'm keeping it in. Well, I opened it up, so I know. There are. So this is really peak C, but I'm keeping it as a phantom D. I want to be ahead of the game. Why? Because it says to me that one little tiny miss, if in the 120-minute chart, it'll probably show up even better. But if I ignore it, I could be waiting for a D when in fact it's really a C, and the market's going to pull, this particular instrument's going to pull back sharply. But if the MACD very strong and the stochastic at 84%, I'm suspicious of it. The phantom peak, Chapman phantom peak, I think officially it really should just be C, and let's leave it at that. Should probably be doing this more in my session where we talk Technical Friday. But there are people listening, I know, that understand what I'm saying when I talk about phantom peak. Now look at this. You've got a real E. Oh, another reason why I wanted to use it is when I did my homework, the euro dollar, which often trades in inverse direction to the dollar, made a trough A. They call them troughs on the way down. We give them lower cases. Right on the 9th of May, going to the 12th. That was a higher low, so that made a trough. That's the reason why. So now this is an E right on what? The 200-period moving average. You know, learn how to use mirror images of, say, let me show you here. You can do the dog and the diamonds. Look here. You see that mirror image? You see, the one is the 100% long, the Dow instrument, the Dow diamonds, and the other is the dog. And you can think of it acting like a dog sometimes, but I like it. I don't use it very often because we usually go DXD or SDOW, the big percentage movers. But look at this. You've got very much the same. Look, this is peak A, B, C, D. That was made in the Dow Diamonds. And on the way down, you've got a trough, A, B, C, D, in the E, in the latest decline. So you can use that. And I always ask people when I do my Master Trader series, my first question is, my early question, maybe not my first. Are you better at going long or going short? There are many people, I've come across them in all the years I've been doing this, that are just really good at identifying shorts. They're hesitant and not, I'm not saying they aren't good at going long, but their bias is to be able to recognize shorts immediately. I go in phases in the futures, when I trade the futures. I'm real good at picking tops, and then sometimes I'm just looking at bottoms, and I don't know what it is. or why it happens. And that means I must be looking at the right chart. A bullish chart, in this case, is this one here, the diamonds. Bearish is the DOG. So if you're familiar looking at patterns, and you can recognize the down patterns much easier than the up, it's nice to be able to use this mirror image of using, say, the SH, which is the 100% long, the SPY, and, 100% short, and the SPY and the SH. And one of them might help you a lot. So what I'm looking at here, and I showed my subscribers this morning, that the Dow Diamonds had made a peak C in the Chapman wave methodology in the 120-minute chart and needed a D. Well, what have we got right here? We've got leg D. I always put a plus sign on the D because that says heads up at D. Look at that D there. Look how sharply you pull back. Look at that D at the doji top of 166.93. This one went to an F. How do you know there's a difference? Look at the MACD, that fast-moving average of the MACD. That green line was holding, and then it quickly turned. Once the F was made, it went right underneath the red line, the slow-moving average, and the RSI was fading over there. On-balance volume was fading. You got a fabulous pullback to where? The green line, the 200-period moving. I'm giving you a lesson here. This is what you're going to be able to do if you are signing up. Do it. You've only got this weekend. I think it's until Sunday or something like that to sign up. And it's just, it's an amazing course. Each one. I mean, terms and options. I mean, what more do you want? So just consider it. For $149 for 30 days, you get 11 hours. You work that out per hour. There is nothing that you can get that is as rewarding. Well, I guess if you had an ice cream, let's see, 30, 19. So, yeah, if you had 300 or something ice creams, yeah, maybe there's something as rewarding. But then, of course, you've got to work it off, so that's not so rewarding. Anyway, consider going to the front page of TFNN. Register now for $149. You get Foundations of Options Trading by Tom O'Brien, Strategies of Options Trading by Tom O'Brien, Moving Averages by Basil Chapman, Stochastic and MACD by Basil Chapman, Candlestick Charting by Mike Comey, and Advanced Candlestick Charting by Mike Comey. Hey, what a deal. So we're in leg D. Stochastics at 93%. That's very good. And the MACD is still strong in the 120-minute chart. Well, I'll give you the scenario that I'm looking at, and I will be back straight after these messages. Basil Chapman sitting in for the one and only Steve Rhodes. I'll be back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Hi, folks. The next show with Tom and Daryl, that is something you do not want to miss. I'm sure if you're listening at all at this time, you're already preparing for the next show. So that's going to be just a fabulous lesson in how different techniques are put together. Daryl has his very unusual system work that he's done, that he bases it on the NASDAQ platform. Tom, of course, uses volume and uses all these various volume techniques and extension techniques, puts it together. In fact, if you're listening to Tom discuss it, the detail that he goes into is what he does in that options, in the 2 options webinars that are on this incredible sale at TFNN just this weekend to buy it, and then you've got it on your desktop. What is it? Did I say 90 days? Well, it's just amazing. So a couple of questions I had during the break. One was there was a mention that India is breaking out. India's the market. Yeah. India, remember, I just used that technique to identify the low bar using the MACD and the stochastic and the 9-period moving average. So this is B, leg B, and there should be a higher move above 2452 in the IFN, which is the India Fund. I don't know if that's what they were talking about, but I just grabbed that. So when I remembered the symbol, I remembered for India. And now look at the weekly chart. The weekly chart has had a tremendous move from the low round about 16. It's gone A, peak B, peak C. Then it goes to D. Now I always have to do this. I have to draw that little circle because that's a technique that I teach my to my subscribers and to those who take my courses. That is in fact a potential instant restart. So this is the very last peak of the last leg in the weekly is an F/B. MACD is still strong. Stochastics at 82%. So far, this is good. Remember the 200-period moving average? It broke above that. That's very important. This is new leg B in the monthly chart. Now, I just wanted to show you something very interesting. Look at so this is still positive. Look at the USD JPY. This is the currency pairs of the US dollar and the Japanese yen. Remember I was talking about just moments ago about the importance of a moving average that you just don't need until you're getting close? Well, look at this. Out of the blue, when you're up here, are you thinking of what moving averages? That black line is the 9-period moving average. Look how it couldn't break decisively above, and it kept going below. and that became resistance. Now it's gone above it. But wait a minute. What did it just hit? On the way up, you look for D's or E's. On the way down, you look for D's or E's. And it went to a trough D on this 200-period moving average. This is what you're going to be learning in the webinar, the 2 webinars that are for sale. And incredible. I don't even know if the word sale is the correct word. This is the giveaway. This is the TFNN present to all of you for being wonderful listeners, subscribers, and devotees of TFNN. I think that's the only way I can think of it. I was shocked when I read. First of all, I was shocked when I read 6 webinars given away for the price of 1. Then I thought, what a wonderful bargain for 3 days for the long weekend. Then I read in great detail, and it says, no. You'll get access to these 6 webinar archives, a total of 11 hours of education for I keep reading. Is that right? 90 days? For 90 days. But it's only good through Memorial Day, Monday the 26th. So please consider go to the front page of TFNN. So here's the 200-period moving average, and the USD JPY is bouncing. Let me do this because we're about to wrap up. I'll have my show at 11 o'clock. We are going to Friday's Technical Friday. We're going to a little bit more detail on the Chapman wave methodology of certain things. I had a quick question about Fossil and T2 as shorts. I thought I didn't see the shorts. Absolutely. I will go, not just hold off a moment, and we will go into, in my hour, I'll do it. I don't think there's a rush to do it. So, folks, what I'm looking at is watch the volatility index. When and if the volatility index, which is at 11.79, goes into the high 13s and the 14s, this market's coming down. Right now, it's buying pressure. Keep thinking buying pressure. I'll be back at
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.